Hello, in today's series, we talk about a highly anticipated Trump's move to impose a reciprocal tariff or tax on imported goods on at least 185 countries. Trump first spoke about imposing tariffs on China as retaliation during his first term as president and now resumed this move during his current term. Will there be any impact if the tariffs were to be imposed? Has Trump's popularity among Americans declined ever since he imposed such actions? Hello everyone. Welcome back to SDA Club, the club for stock trading and analysis. This channel is dedicated to providing you with high-quality tutorials, guides and insights that demystify the world of trading. Join us as we will share more trading secrets and valuable insights. To stay updated and be the first to access these valuable resources, hit the subscribe button now. By subscribing, you're opening the door to a world of trading and maximizing your potential for success. Before we dive in, here's a quick disclaimer. The information in this video is for educational purposes only. It's not a call to buy or sell. Since the 1980s, Trump has advocated for import tariffs as a tool to regulate trade and retaliate against foreign nations that he believes have been ripping off Americans. So, what is a tariff? A tariff is a tax imposed by the government of a country or customs territory or a supranational union on imports of goods. Besides being a source of revenue, import duties can also be a form of regulation of foreign trade and policy that burden foreign products to encourage or safeguard domestic industries. These taxes are typically passed on to consumers, raising the cost of the product. For example, if a product is valued at $100 and has a 10% customs duty, its price will rise to $110. In Trump's campaign for US presidency, Trump promised to use tariffs to achieve a wide range of goals, including preventing war, reducing trade deficits, improving border security, and subsidizing childcare. While campaigning for his second term as US president, Trump pledged even higher tariffs than his first term, including a 67% tariff on China, a 100% tariff on Cambodia, and even a 50% tariff on the European Union. He also proposed tariffs to penalize US companies that outsource manufacturing, such as a possible 200% tariff. Although Trump has said foreign countries pay his tariffs, US tariffs are fees paid by US consumers and businesses either directly or in the form of increased prices. Shortly after being re-elected to the second term, Trump acknowledged that tariffs might cause some pain for Americans, but insisted it will be all worth the price that must be paid. A CNN poll released on March 12 found that 61% of Americans and 72% of young adults disapprove of the way Trump is handling tariffs. 59% of Americans without college degrees and 62% of those making less than $50,000 also registered their disapproval. Therefore, will this approach of tariff implementation affect Trump's next term as president? Will Trump be the president that will cause the next recession? Trump's recent Liberation Day on 2nd of April pertains to the implementation of new tariffs on imported goods into the United States. Here's the breakdown of what that entails. These tariffs aim to reduce the US reliance on foreign goods and addresses what he perceives as unfair trade practices. The implemented tariffs will include a baseline tariff being placed on all countries, and then further reciprocal tariffs on countries deemed to be the worst offenders in trade practices. These tariffs are designed to be reciprocal, meaning they are intended to match the tariffs and other trade barriers that other countries impose on US exports. The tariffs have a 10% baseline that will be placed on all countries that the USA trades with. There are further reciprocal tariffs that will be placed on countries that are deemed to have unfair trade practices with the USA. Here, we show you the countries that will be affected by these tariffs. Based on this table, you will find that countries like China, Vietnam, South Korea, Thailand, Switzerland, Cambodia, Bangladesh, and Sri Lanka has relatively high tariff rates. These tariffs were calculated using a formula that takes how much a given country sells to the US, subtracts how much that the country buys from the US to calculate the trade deficit, and then divides the trade deficit by the country's total exports to the US. We take an example such as the European Union, and the resulting number came out to be 39%. This number, according to the White House, represents alleged unfair trading practices. This tariff will then be divided roughly in half to produce US discounted reciprocal tariff, shown in this table as USA discounted reciprocal tariffs. Some experts have criticized how these tariffs were calculated, and these calculations could cause ambiguity, leading to more serious implications on the economy. Economists have also expressed concerns that these tariffs could lead to increased prices for consumers and potentially disrupt global supply chains. There are also fears that retaliatory tariffs from other countries could escalate into a trade war and could cause serious implications on the global economy. However, this move is consistent with Trump's America's First trade policy, which prioritizes domestic industries and aims to reduce the US trade deficit. In essence, Liberation Day signifies the commencement of a new phase in US trade policy under Donald Trump, characterized by the imposition of significant tariffs on imported goods. The US markets have since been affected by Trump's announcement, and experts have mentioned that the chances of a recession have increased. The probability of this increase was estimated to go to 60% from the previous 40%, as shown in this chart here. The S&P has already been down 13% in the past month and year to date. Will the S&P decline further? We can use technical analysis to chart out the likelihood of a further decline. Here is the weekly chart of the S&P 500 with prices from July 2021 to April 2025. From this chart, we note that the latest weekly decline was the week from 31st March to 4th of April, declining 9%, represented by the long red candlestick, closing at 5074 points. I drew a blue line at this level to represent a potential immediate support, as prices have rebounded twice from this level back in 2024. Should the market continue to weaken, the next major support levels will be at around 4,517 points and 3,784 points respectively, represented by the two blue lines below. Based on my opinion, I noted that there is still plenty of opportunity for prices to continue coming down in the near future, as the moving average divergence convergence signal, or MACD, indicate that the bullish momentum seems to be coming off. The price-earnings ratio, or the PE ratio, of the S&P 500 is currently trading at around 28 times earnings, while the index's past 5-year median average is just 19 times its earnings. Could this indicate that valuations of most companies are high? I think that most Fortune 500 companies have managed to grow its earnings quite sustainably and could continue to do so in the future, provided the tariffs create long-term value to these companies. Should this be the case, then a 28 times earnings multiple today could still be considered reasonable. Sadly, there's still much uncertainty on how these reciprocal tariffs will play out. Is the market overreacting in the short term? Remains to be seen. Till then, goodbye and see you in my next video.